Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken and our model portfolio is up 8.54% year to date as of October 21, 2023. Here at Spy Trader Now, we take investment grade capital and we trade the S&P 500, and our goal is to beat the returns of the S&P 500 buy and hold investor. Currently, we're not beating the buy and hold investor year to date. We're down 1.5%. But our goal is to surpass that return before the end of this calendar year. Here are some past returns for Spy Trader Now. You can see the last 3 years have been very good returns. Last week, the S&P 500 lost 2.39% for the week. I'm going to show you the charts in much greater detail later on. Now, here are last week's trades. So the first trade that I made, and these trades went out on Friday, 10/20/23. And here are the trades right here. And what happened is I buy to close the two covered calls because I had two covered call in the money trades on the books at that time, but I bought to close them, and this is the exact trade that I did right there. And I also sell to close the long put. I had one long put, and I made some profit on that, and I'll show you that in the next slide. Now, just for full transparency, I also, in my own account, was able to do buying some calls on Friday, and I bought 3 long calls, SPY, and that was about $7,000, and you can see the exact call that I put on right here. But I'm traveling right now, and I'm not at my house in California. I'm actually on the West Coast. And what happened was, I'm on the East Coast, and what happened is that I have a poor internet connection, so the trade alert that I wanted to send out for this trade never got sent. So I cannot put this in the model portfolio because the trade alert did not go out. So we'll wait and see what happens. But I am bullish on this market at this time, and you'll see in this presentation why I feel that way. So here are some of the trades that I've made in calendar year 2023. If you want to see all my trades, you can head over to spytradernow.com. There will be a link in the description down below for spytradernow.com, as well as all the slides that I'm going to present today. So whatever you want to see, if you want to check it out, just check out the description, and you'll see all the links down there. Now, here is our equity curve for our model portfolio, because we want to monitor how well we are doing. Here is the equity curve for the S&P 500 buy and hold investor year to date. And here are the two equity curves combined on a percentage basis, because we compare our model portfolio in blue against the benchmark of the buy and hold investor for the S&P 500. And you can see that we are very close to surpassing this buy and hold investor right now. And that is our goal before the deadline, which is the end of the year. And you can kind of see how my portfolio has been slow and steady the whole way, the model portfolio, as the S&P 500 has kind of been a little bit more jagged. They had a really good bullish run right here, and I did not put enough long call trades on during that time. That's why my portfolio didn't fare as well this year. Okay, so here is the Fed Chair, Jerome Powell, and here are interest rate hikes or non-hikes, where they just skipped a rate hike in the announcement made on September 20th, 2023. Now, the next Fed announcement is going to be on November 1st, and that's a week and a half away. Is the Fed going to skip, or are they going to do a 25 basis point rate hike? We don't know the answer to that yet. We're just going to have to wait and see. But either way, we should be somewhat close towards the end of the rate hikes. Now we're looking at things from the presidential election cycle theory, which states, depending upon the year of the election, you have historical rates of return. This is for the S&P 500 historical rates, and this is for the NASDAQ 100 historical rates of return. Now, currently, the S&P 500, this is 2023. President Biden is in his third year. Historically, that averages in the third year of the presidential election cycle 16.3%. Currently, the S&P 500 buy and hold investor is up 10%, giving you room to allow 6% more to between now and the end of the year. By the time you reach the historical average of 16%, giving this this market room to grow another 6% in the next few months over the time of where seasonality also comes into play. And I'll show you that screen in a second. All right, now we're looking at things from the bond market outlook. Now the bond market, although bearish because of an inverted yield curve and rising interest rates, I want you to notice how close to parity we are finally getting. We have the 2-year now at 5.19% and the 3-month yield at 5.34. That is almost parity. The 10-year is still below 5, but you can see the jump it made from 4.6 to 4.83. So we are getting to a point where we're going to have a normalized interest curve, yield curve soon if this trajectory continues. So we will monitor this, and we will absolutely watch this every week until we get a normalized yield curve, which we want. Now we're looking at things from a valuation according to current market valuation, CMV. Here's the link in the description down below. We are overvalued by 43% on a price per earnings ratio, the PE ratio, and that brings us to 1.1 standard deviations. And we're just trying to monitor where we stand on value. Now we're looking at things from the Fear and Greed Index. Last week we were here, and this week we are here, taking us to almost extreme greed. Here's our friend Warren Buffett, and of course there's his famous quote. So this is where I want to start putting on long positions, because we are obviously at a point when the market is looking fearful. Now we're looking at things from a seasonality outlook. This is the month of October. This is going back 20 years. There's a 65% probability that we are going to close the month higher than when we opened. That sounds reasonable, but believe me, it's okay. This is the summer doldrums right here. There is a normal weakness on a seasonality basis in October, September, and October. But next month, the month of November, there is a 79% probability, only providing 1 month better than the month of November during the calendar year, which is April, which just takes you from 79 to 80. These are really good odds that in next month, which is coming up very soon, is going to be a good month, okay? So for the month of October, currently we are down 1.47%. This is not terrible at all. These are not large waterfall decline. Now we're looking at things from a long-term outlook. This is a monthly chart for the S&P 500 going back a full 20 years. You can see the bull run between 2009 and all the way to 2022, and how we stayed above this line the entire time. We are still above this line, although we have reached a peak and we are coming down, and we are starting to cross below our moving averages here. Now, once we go below these moving averages like we did here, you can see that it gets a little choppy inside of here. So I'm expecting a little bit of chop, and I am expecting a little bit of a bounce. The MACD has topped and getting ready to cross below its signal line. Slow Stow is already topped and crossed down below its signal line and now is at below 80. It's at 79.78. Now we're looking at things from the intermediate term outlook. So it's a weekly candlestick chart and we go back 5 years so we can see what's happening weekly. We are in a trading range between this line right here and this line and this line. So we've crossed below this line right here, which is that high. Now this high right here is the next line of support. So there's your trading range between here and this lower line right here. But still, you are still in this range. I know that the MACD is below its signal line and traveling south, and the slow stochastics is getting some cross current and wiggling right around this 20 mark right here, kind of like it did right here. But if it starts to just hang in there and move sideways like it did here, well, then you're going to get that pop coming up. That pop coming up is what I'm expecting right now. Now we're looking at a 6-month chart of the S&P 500 candlesticks, and you can see the downturn that we've had. And we've had 1 week of a solid downturn. The Friday's action was not good, but the way that it ended right at this purple support line right here. You got support from this right here. You got support from this right here, these highs right there. So we're going to have a little bit of a sticking point right now. Now, of course, I don't know. There's no guarantee how this is going to play out. Oh, and there's the 200-day moving average in black. So we are right at the 200-day. We're at this support line. I see a bounce happening here. The bounce has not happened yet, but I can see where the probabilities of a bounce are high from just what I'm seeing so far. But it is possible that even though I kind of see that the market will still continue to fall. And then I see the next support line at these highs right here, showing support at about the 412 level right there. So I wrote that in here so you can see it as well. Now we're looking at a ratio chart for the S&P. So the ratio chart that we're looking at is the equal weighted S&P 500 compared to the normally cap weighted S&P 500. Now the ratio chart is the black and red lines right now. You can see we've fallen off of a cliff on the ratio chart. When you fall off of a cliff and the numerator is the equally weighted, that means that the cap weighted S&P 500 is surpassing the equally weighted S&P 500. That's when you fall off a cliff like that. This is going back 20 years, folks. And when the ratio chart has fallen off a cliff like it has, it's only done it 2 other times in the last 20 years. Each time that it's happened, the S&P 500, which is in the normally cap weighted in blue, has also fallen off of a cliff there, and it fallen off of a cliff here. We have not fallen off of a cliff here in 2023. This market is holding, and it has not fallen yet. Could still fall. Now, the last 2 times the ratio chart has dropped like this, you saw a sideways movement for about 6 months. We are just here at the beginning of this stage. So it is possible, if we're going to repeat ourselves, to get this sideways current. And then once that jumps up, then we absolutely want to make sure we are long this market, because we are looking for this nice bull run, and we're going to take advantage of that bull run. We're not in that position yet where we can put the pedal to the metal and pretend that that's going to happen. That has not happened yet, but we're watching this chart to help us, guide us, to tell us when that happens. Now we're looking at the VIX, Volatility Index, also known as the Fear Index. Now, there are 3 trading ranges for the VIX. The VIX is in these black and white candles, so the candlestick chart. The S&P 500 is this black line right here. Now, this is an ultra-low trading range for the VIX. Then you have this more, not quite ultra-low, but still low because it's below 20 trading range. We are just above that at 21.71 here. But you know what I don't see? I don't see that large candlestick, positive bullish candlestick like this one here. When you get that, that's when the market is clearly telling you, hey, I'm jumping up and I'm going up even higher. Right now, I don't quite see that. I see the VIX kind of holding and possibly coming down. If indeed the VIX is going to hold and then drop down, well, the S&P 500, when the VIX comes down from here to here, the S&P 500, which is this black line, that's going to go up. And I think that's actually going to happen. And so I want to be positioned long. That's why I want to take on some more long calls. And that's why I took off my in-the-money covered call. And I took my put off because I don't think the market is going to really drop from here. And so I see the double bottom going on the S&P 500. I see the VIX here kind of stalling and possibly coming down. And let me show you some more data to support my thesis. Now we are looking at the Thinkorswim platform. This is a one-year chart, S&P 500, where we have the standard deviations. +2 and -2 in gold, +1, -1 in pink, and the halfway regression line in this dashed green line right here. This is some information about standard deviations and percentages. Right now, on the one-year chart, we are below the -1 standard deviation. We're currently at -1.2. We are also right at the 200-day support level. We are also right here at the same level as previous trading, giving you a double bottom, giving you plenty of probability, a high percentage of probability, over 70% probability that we're going to jump from here on the one-year chart. Now we are looking at the 6-month chart. Now you'll notice going back 6 months, this market is still bullish. Look at the trajectory of your standard deviations. It is higher going from the left-hand side of the chart to the right-hand side of the chart. Here you can see the double bottom, and you can see where we are right at the 200-day, and we are very close to this -2 standard deviation, which once you reach the -2 standard deviation on a 6-month time frame, there is a 95% probability that you're going to bounce and go up from here. Now, this is the shortest time frame that I'm presenting here today. This is a 3-month chart with your standard deviations. Now here, you can see that the standard deviation lines going from the left-hand side of the chart to the right-hand side of the chart are heading down, telling you that over the short-term basis, we are in a downtrend. We know that we are in a downtrend for the short 3-month time frame. We are also right at the tail end of the summer doldrums. I believe that we are going to get at a minimum this pop right here from this low to this high, like we did here and here, like we did here to here. I think we're going to get another one. Now, it's possible that this can drop down a little bit more to this -2 standard deviation. Here it went below the -2, excuse me, the -1 standard deviation. The -2 is in gold. So here we went below the -1 standard deviation on the 3-month time frame, had a few days of sideways movement, and then we got that large up candle, and then started to come up Peter, and then we just touched and kissed the +1 standard deviation. So I think we're going to get something like that. And I even put in here my boxes to show you this is my buy zone. And then once we come up here, this is more of my sell zone. Now it is possible that this could be the total end of this downward movement, and we're going to come up and then the market will continue to come up. But it's hard to say at this point in time. We need to see trading action where it kind of starts pushing and going up and kissing that +2 and pushing this standard deviation chart on the 3-month time frame to go from a downward slope to a sideways slope and then eventually to an upward slope. So we have to monitor this. But this is what I see right now. So I just gave you a ton of information in this video. Now comes the critical thinking. What are you going to do with that information? Many people on YouTube, they give you the information on what they see, but they don't tell you how exactly they put their money where their mouth is. And that is one of the reasons why I started this channel. This is where I'm putting my money. So I'm not just talking the talk, I'm walking the walk. So as of October 21, 2023, the market summation, according to me, Ken, your host with SPY Trader Now. On Friday, I did trades by selling the put and buying to close the in-the-money covered call. And I did want to place that long call trade that I showed you, but I was having internet problems. So I do want to put on a long call trades, and depending on what I see the market doing on Monday will determine my next step. So overall, I'm still expecting weakness till the end of October, November, and then strength till the end of December. Now this time frame can change depending upon how the market reacts. November, as you saw on that seasonality basis, has a 79% probability of being a positive month. So I'm expecting the bottom soon. That's my expectation. And even though I have that as an expectation, that's not a guarantee. So I got to monitor, because it's possible that this market could continue more downside weakness, because we have not seen the market bounce up yet. But I just want to let you know how I am playing this market. I hope I have given you some valuable information in this video. If you want to learn more about me, you can head over to spytradernow.com. And you can go ahead and hit that subscribe button, ring that bell to be notified when I post a new video, and help me promote this video by smashing that like button down for me right now. I thank you, and I wish you good trading.